Well, welcome everybody to the Titan Circle Forex Trading Study Group. My name is Dan Hanson. I'm your host. I am not a financial advisor or a financial planner. What we're here for is strictly educational and speculative uh, trades for the market. It's whatever we're looking for. But today we're going to focus on my favorite topic, the ETM candlestick. So let me share the ETM candles, a little bit on the ETM candlesticks. So the ETM candlesticks was created by Gerardo G. Money Paez and Marcus McKinney, which are my mentors, and I've been with them for quite a while. And so is all of you here, especially my good friend Letitia, which she just adores G Money like I do. And it's a system designed to look at supply and demand in the marketplace uh, and place a trade. And just by looking at a series of candlestick patterns, and all patterns can be found on all time frames. You can identify potential entries, stop losses, and take profits. And it'll also help you manage your risk. So if you don't know what supply and demand is, for the most part, supply and demand is like gasoline. So during COVID, gas prices were way low, like almost 99 cents a gallon in some areas. And the reason why is because we had a surplus of gasoline because nobody was driving anywhere. We were quarantined, we were stuck inside. So there was nobody on the road. So in order to move gas, and that's why trips became very prominent during COVID because gas was so cheap. It was affordable for people to hop in an RV and take off and go wherever they wanted. Now that COVID's been over for a minute, gas prices are shooting back up because now that supply has been dwindled away, there's more of a demand for gasoline. So the price, of course, is going up. And what we look for in the enter the matrix arena is what we call an equilibrium zone. That's where supply and demand meet each other. They call it a fair value price or fair market value. So what the ETM was designed is to give us some parameters for trading. First of all, it's looking for control or direction of the market. Who's in control? Are the sellers in control or the buyers in control? The second thing these candlesticks will do for us is give us our entry and exits. And of course, as I mentioned earlier, it will show us our risk management. And the recommendation for when I first started trading for most traders is either 1-to-1, but 2-to-1 or 3-to-1 is also a good risk to reward ratio. But ATM candles are just simply that. They're candlesticks, and I don't have the wicks on these on purpose. To just show you what the patterns look like. This first pattern is called the brother engulfing candle, which shows the supply and control as price moves down. I'm looking for my drawing tools. Of course, you can never find them when you want them. So right, so it's showing us that sellers are in control. We look for our equilibrium zone, which usually is controlled by this particular candle, this red candlestick. So it's this engulfing candlestick encapsulating or engulfing its brother. And then we have our next candlestick, which is called a drop-based drop. Sellers, again, are the market's going down. But what's interesting is it takes a pause in the middle. So what it does is it goes down for a bit, then it kind of retraces. So we get this N wave pattern kind of going on here that most traders look for in this little zone here. So we have this downward direction, we have a pause and come back, retrace, then continue the path down. And then we, of course, have our break of structure candlesticks, which again shows direction down. It engulfs two bullish candlesticks, which is why it breaks structure. So you have a bullish trend going up, and then it just kind of does a turnaround. So we got this upward direction. It peaks out, hits a basically a higher high, and then it continues to move down. And I look at this first candlestick, look at it as my entry zone or my equilibrium zone, somewhere in here. So we have this impulse, and then this correction could be a correction, then an impulse down, or a U shape or a horseshoe. There's other ways of looking at it too, but breakup structure is what it's been called. And the way we trade those, come on, little buddy. The way we trade those is by looking at our next slide, which is, whoops, drawings, is looking, oh, did I do something wrong? The same thing goes with the, come on, buddy, is my, there we go. Same thing going in the opposite direction. The bullish or buyers are in control of the market. We look for that retracement, and then again, we're engulfing. So it's this brother, big green candlestick showing us the direction of the market. It's pointing our way north or up. Right here is its engulfing brother. It's encapsulated this brother. So this becomes our equilibrium zone down here. And demand control candlestick, same thing as the drop base drop, because the opposite is the rally base rally. So we got the impulse, got a correction, then another impulse. And this correction zone is what we call so we got the rally, and this base is a correction and what we call an N wave pattern. Then with the continuation going on with another rally. So same thing with the supply candlesticks breakup structure. We see that we have two bearish candlesticks encapsulated or engulfing both of these two candlesticks. And the zone that we look for is anywhere. Usually we can fib this candlestick and look for a 50, like 23%, 50%, 66, 61%, different zones. But this zone in particular is one that I look for as well as G money. And let's see what that looks like. So looking at the bearish, the BECs, again, we see that we have this entry zone. That's what I thought. So when we're looking at our control and direction, so we see we have the bears are in control. We have red candlesticks. If you have black and white candlesticks, it depends on which ones you have, but whichever ones you indicate as your bearish or down candlesticks, that would be your controlled candlestick. Same thing with the drop base drop. We have the bears are in control. I use usually green and red to indicate my bulls and my bears. Sometimes I use orange and blue because I'm a Bears fan. I use blue as my up and orange is my down. It's whichever way you decided to go. If you're using black and white, pick which one is going to be in one direction or the other. But anyway, either way, this is our entry zone we keep looking for. So this would be our entry zone anywhere between here, the top of this candlestick, and I guess the bottom, the base of this candlestick, or the top base. So it'd be the close down here and the open on a bearish candlestick. If you don't know the anatomy of a candlestick, join me next week because I will be going over the anatomy of the candlestick as well to kind of give you more detailed information what I'm going over. For those of you that were in this class this morning with G-Money, we were talking simply about the ETM candles. Like I said, the first thing we look for our control or direction. And whether it's a bullish market, we're looking for whichever one's the bigger candlesticks. Whether they're bullish or bearish, it doesn't matter. All we know is that there's certain levels that price likes to come back to, that fair value price, fair market value, which is different than what people refer to as the fair value gap. So Buyers and sellers like price to be somewhere in the zone around here. They love for zone. Oh, they want us to be in the zone coverage here. They want us to be in this zone. Sorry, I can't draw very well with my mouse, but it's looking for this zone right here. We're looking for the zones here, same as our entry zone. You can take it at the top, middle, or the back wall, as they say, of these zones. Our stop loss always goes at a low if we're going in the bullish direction. And if we're going in the bearish direction, we're doing just the opposite. We're going to be looking for the downward direction. We're going to put our stop losses at the highs, as indicated here. We're looking for our stop loss at all the highs. Entry zone here. And of course, our take profit is usually at another higher low, depending on which direction the market's going. My TP1 is usually the length. So if we have this retracement, I'm looking for TP at the top or the high of the previous candlestick. So I'm looking for a price to come back to here, hit our zone at some point, and then take off and keep going in the direction of the candlesticks. Any questions at this point? Pretty clear? Let's see if I can get my chat on so I can see if there's any questions. If you have any questions, just drop them in the chat. And like I said, we're going over G Money's Enter the Matrix. So this is pretty much the simplicity of the system. It's not a challenging one. It's easy to work with. And when we look at the actual market itself, we see the same candlestick formations in the market. And I have an indicator that G Money has given us, which is called the ATM candles. Right now, I believe we're still on version 2.0. And if you want to make sure you got the most recent one, you can actually go to the three dots at the back. You can go to see if there is a, where's it at? About the script. So you click on the About the Script. So it takes to the ETM candlesticks, and you'll be able to remove or add it to your favorites accordingly. So if you don't have it, you can add it. And let's see if I can get you the link for that, and I can share that in the chat. About the script. Let's see if I can get the page for that. If I can share that somehow. Let's see. Trying to find how I can give you the link. If I can, I'll definitely put it in the our copy public link. There we go. Found it. When in doubt, Google stuff, look around. You'll usually find it. So let me put that and share that in the group chat as well, if you need that link. As soon as I can find the group chat. There you go. There you go. Now you can go out and get the script for that ATM candlesticks. And of course, you notice in there, the beautiful thing about it, it identifies them for you. There's that beautiful rally-based rally here. That beautiful rally-based rally here. A drop-based drop. Break of structure candlestick right here. Not a pretty one, but it is one. Some people could also refer to that as a evening star, but I'm still using it the same way I would use a break of structure candlestick. And I would make my trade accordingly and take my stop loss there, take my take profit somewhere at either at the height of this candlestick. And so when I hit there, I can go there. That's probably not even a 1-to-1. So let's see. Let's say we did take this trade and we put our candlesticks in our position tool. So those of you who don't have your position tool handy, you can find the position tools, the third or fourth one down. You find a long position and a short position. If you hit the star, you can favorite them and put them on your toolbar. Mine's right here at the bottom of the screen. It's always where I keep mine because I can see everything pretty good. So I want to put a short position. So we're going to play this ETM candlestick here. I'd place the entry right about this level. My stop loss here. And look at just the 2-to-1 trade. Just setting it, if I just left it as a 1-to-1 trade, it would have played out perfectly. But noticing I have this as a backup and my stop loss is here, I can increase my risk, or not increase my risk, but the amount that I could make on this particular trade by decreasing my stop loss. So I made it, instead of a 1-to-1 trade, it is now a 2-to-1 trade. It took its profit on the third candlestick, and we're there. So that's the easiest way to trade a candlestick. We can just, like I said, just take we trace our, go back, and we can go back and play the candlesticks. So we have our entry. We got our entry here at the, take right here at the ETM candlesticks. Got our stop loss up here. We got it basically a 1.5-to-1 trade. As we move forward, each candlestick, first one triggered the trade, earn profit. Then the next one ends the trade, takes us out of the market. We win the trade, and we're ready to trade another day. Any questions so far? Let me know if I'm going too fast. That's the beauty of the candlesticks. And I've been trading with them for quite a while. I enjoy using them, and I find that they're pretty easy to work with. Same thing. We have this base drop over here. Same principle applies. Put our stop loss here. We got a 1-to-1 is basically somewhere in here. There's a 1-to-1 trade, but we can go a little higher than that. We can go to 2-to-1, probably. Let's see, is it close? Not quite a 2-to-1, but if we go like a 1.5-to-1, would be just amazing. It doesn't, and so we could trade at like a 0.01 lot size. So say if you have a very small account, or you want to toss a pebble, and just to make sure you're going to make it. Is it going to hit? Is it going to take profit? And you just want to test the waters. The 0.01 lot size means it's basically, on this trade, we have an $8, 8.686, I think, $88.86. 8.7. So it's $8.79, or 87.9, or 88 pips. Multiply that by 0.01. That's an $8 profit for you on the day. Not a bad trade. If you're playing 0.1, you'd probably get $10 on the trade. Or $8, something like that. My math thinks. But if you put your Lambo out at a 1.0, that'd be about an $87, $88 win for you. So one would be $8.80. The other one's 80 cents the original. Yeah, 0.01 would be 80 cents. It's in the tenths of a percent. And that'll be part of the candlestick anatomy class, because that's all has to do with price, value of pips. And if you don't know the value of a pip, I have a pip calculator here. It's a very simple one, and most of you can have access to it. It's free. I believe this one is, let me find it here. Pip calculator. Where is my pip calculator? There it is. I don't have it. So that's another calculator. So there's one called pip calculator, but this one is built into the enter the matrix uh, candlestick. So what I'm going to do now, for those of you that have questions on the new Enter the Matrix or ETM candlestick indicator, which I gave you a link to, this is a very simple breakdown of it. You can determine your risk. Say you want to risk 1% on $1,000 account, with your stop loss being 1 pip, or basically $10. Each pip, each $1 move in the market is worth 10 times that. So there's 10 pips. How do you put that? There's 10 pips to $1. That's it. For every dollar is 10 pips. Yeah. And then you can show your ETM candles, which is indicated by the rally-based rally. In this case, the drop-based drop. You got the DBD showing there. And if we go over here, we got a BEC over here. Now, interesting on this candlestick, we got two BECs lined up in a row. And let's talk about this. This is an interesting trade. So let me just back up the indicator, the frames, and let's just look at this. Normally, you would think that the bulls, which are my white candles, would be in control of the market. And you would think the same thing. However, we see coming down, we got this nice morning or evening star, a big candlestick with a doji candlestick at the top with another engulfing candlestick. And notice how it engulfs both the bodies of the previous two candlesticks, or it comes pretty darn close to it. That way, you know it's a good morning star. That means it's totally shifted directions. It's trailing this BEC up here, which isn't even counted by the indicator, which is interesting. But so we have more black candles or downtrend than we have uptrend. So we are fighting a new trend. We're in a downtrend at the moment. Even though everything we know in the market could be going up, we're looking for a price to go down. So in this candlestick, we got this preceding candle, BEC, preceded by a drop-based drop. So the way I would have made that trade, I would have put my entry, I'm still looking for sells. I'd put my trade here. My stop loss would have been above this rally-based rally, which is somewhere up in there. And let's see if I can move that over. There we go. There we go. And then I would take my take profit, either 1 or 2 to 1. We'll go for a 1.5 to 1. My risk management, I choose 1.5 to 1s, 2 to 1s, or 3 to 1s. Those are the moves I look for. So when I played this candlestick, I was interesting when I was in this particular trade the other day. Not that long ago. Was Thursday? Yeah, Thursday. It's interesting when I was looking at this. I was looking for a market to go the other direction. And I thought, here we got the pullback. We're going to continue going up. But because I'm looking for sells, I'm still looking in favor of the sell direction. We're still in the zone for this BEC to work. I'm thinking, okay, it may just turn around and take me out of the market. The beautiful thing is, if it did, my stop loss is only $3. So $3. So I wouldn't have been risking all that much money. It's only not even 1%, definitely less than 1% of my account. So I'd be happy, if I lost the trade. I'm not going to cry over spilt milk, because it's either going to win or it's not. But I had my money going on the downward direction. And then when I saw it start, it broke the level. So I had like my entry to, they call it a sell stop. So I put it on the back wall of this candlestick, and I'm going to bring out the candlesticks. The beautiful thing that G Money programmed in these new bonus features is giving us the zones. It'll highlight the zones. And if we look at this close enough, we see equilibrium zone. So I'm playing it off the back wall of so I got a break and close below this green zone, which to me indicates the market is probably, and I do say probably, going to continue going and break this low, or at least test it. And I could either set, this would be my take profit one, which would be here at the top of this candlestick. Take profit two would be at 1-to-1, somewhere in there. And then I'd set the next one somewhere around 2-to-1. So I like 1.5-to-1. I'm happy with that. That's kind of one of the zones I like. So I'm looking for the continuation to go down. We look like we're going to get that pushback up. A nice big juicy, what they call a inverted hammer, or actually it's a hammer, not inverted, it's a hammer. So it's kind of going to formulate, it looks like it could formulate a morning star and go above. However, price still is at the low end of my zone here. It's at the very edge. It's break even for me at that point. I just played it out. I'm looking, okay, is it going to turn around on me? But see how I get these bigger candlestick, these wicks to the top that don't really close above? So I have a big indication that price is going to keep going down. I was happy with it. And there she goes. She's now heading down to the races. I kept going down. There we go. Continue going down. And I make my take profit. There. So just because you're given an ETM candlestick doesn't guarantee it's going to go our way. The way I trade an ETM candlestick is I have what they call a range strategy. So I'm playing both sides of the same coin. I'm looking for either this trade to go up to the upside, taking my 2-to-1 trade, and I take my stop loss at just below the wick of this candlestick. So, on the next candlestick, I would have broken in, I would have been in blue. However, it turned around and just decided to keep going down. And that trade would have not traded well. It would have been a poor trade in my cut. But then I would set an alert to let me know once I saw this candlestick. I would bail the market, close this trade out. I'd probably take a lot less of a hit by closing it at, so I put an alert at the bottom of that ETM zone, just to let me know if it came back and retouched it. And that would just give me an idea if this trade was still going to go. And of course it didn't. I had set my stop loss a little higher, even at the base of this candlestick would be here. It'd be a good trade. So there's several ways to play range trades. I try to go for as small amount as possible. I try not to do more than 50 pips. So I try to keep it really short and simple and not break my bank. There we go. We're only talking about $1.50. Even if I had set my stop loss down here, I still 29 pips. Yeah, I'm good with that. I could live with that. So any questions? Feel free to unmute yourself if you have a question.
I don't really have a question. I'm getting used to I think I like the ETM candles better than everything because it makes it easier for me when I'm entering. It just kind of, that's what they taught us, enter at the at the equilibrium, and that's what I like. And a lot of times it does work out. So I appreciate you showing us again about that.
Yeah.
Mhm.
Yeah, and that's what I like about ETMs too. Like I said, and especially when we're confronted by two ETM candles right one after the other. And you would almost think that we're going to see the reversal and test this this drop-based drop right here, which is where I would have put my take profit on this zone right there. I would set my take profit up here, my stop loss down here. And either way, it's still not a bad, we're talking 224.8 pips, something like that, 248 pips. Still not too bad, especially at 1%.
Not bad at all.
No, I could do that.
Mhm.
That's why even if you have an account, if your account's not over $500, I would keep my trades at this is if you're starting out new, a point zero one lot size is sufficient. I had posted a what do you call those? Oh, I can't think of those interest calculators,
Mhm.
compound interest calculators. So if
Compound
you come,
interest.
yeah, so
Mhm.
compounding 1% every day or every trade adds up. And I think let's see if I can find my lot size my calculator. Hang on a second. I know I have it around here somewhere. So, like I said, if there are any other questions while I'm looking for my uh, compound? There's a four. I'll even put that in there. The link 4x compound compounding calculator. Okay, cool. And you can use the one, there's one called myfxbook.com. Pretty popular amongst most people. Let me share that screen. Come on, share with me. Come on, be nice. Be nice. All right, somewhere in here. All right, how do we get rid of this thing? Oh, continue. There we go. So you have a starting balance. Say it's $1,000. And you're talking about 30 days, 30 months, whatever period. I usually go 30. There's 20, basically 20 trading days in a month. So we're going to go 20 days and we're only going to risk 1%, or we're going to gain 1% per trade. So starting with $1,000, come on, calculate. There we go. So at the end of 20 days, you've made $220. It may not seem like a lot. When you start out, your first 1% 10 bucks, then you're doubling it. Then the next one you're getting one and a half back. So you get, as you keep adding another basically $10 profit per day. But you can change that. $1,000, then you might risk 2%, over a 20-day period. Now you're talking bigger bucks. You're talking 485, and even 3% is not bad. So you're risking $20 to make $20 if you're doing a one-to-one trade. A two-to-one trade, you'll get $40. All that is taken into account when you set up your risk man. That's why risk management is so important. Here's our 3%. We're risking $30 to either double, triple, and look at it, even 3%. You're making $800 in a month. It may not be a lot to some people, but $800 a month can make a difference whether you go bankrupt and have to foreclose on your house, or if you need to pay the doctor bill, or if you just want to take a little trip somewhere. And Miss Iris probably chuckling because she's experiencing some of that. And I feel you there, Miss.
So you hit me.
That's all right. Hit you right where it hurts, right in the pocketbook.
You almost choked me in.
I know, right? I heard it all the way here in Chicago. But
Wow.
that's why, keep it under 3%. You don't have to throw a million, $1,000 can go a long way. And not only that, if you think about it, if you make a one-to-one trade, if you make even, just think about this. If you make three one-to-one trades, say you do that in a week, you do three trades a week, you can make either 92 days in three trades, or you can make $92 in 3 days. So it depends on how you do it. So if you trade, like my trading plan says, I trade 3 to 5 trades per day is my limit. Win or lose, that's all I trade, 3 to 5 trades. My goal is to get anywhere from 35, 50, or 90 pips per trade. So, and gold has been so crazy, giving us what, 400 pips per day, maybe and more. Gold has been going crazy. Gold, though, to me is a challenge because the volume is so rapid that I sometimes tend, once I'm up, I get feeling good, I get a little cocky, and I give back to the market what I made. That's why I limit myself to how many trades I make. So I make 3 trades, and if I'm in profit, I close the door for the day and walk away. And if I'm in, I hear Derek agreeing with me there, right?
I think they're dreaming.
I hear you, brother.
I think Derek's an aftermath person too. After messed up, and then he got this conversation for you.
That's all right. That's all right. But that's what happens. We get caught up in things like that. Sometimes like I get caught up and I'm in a winning streak. And then I have a tendency to chase price. And every time I go to chase price or go chase a trade, I end up losing trades. And I end up giving back
Long time.
what I earned plus some sometimes. I mean, I had a $100 account, got it all the way down to zero. Just because I put in the wrong, I made 3 errors in my trades, 3 trades only. But I put the wrong risk amount on each trade. So instead of doing my 1% per trade, I was doing 3% per trade. And so $99 went really fast. I took out all 3 trades and wiped out my account. But the beautiful thing is that's why we have margins. And if you have a GNT account, they will, like if you go below your account amount and you go over, they won't bill you for the extra buck or two, or I don't know if it's any more than that because I was only down on, I hit zero even, right on the money. It wasn't overdrawn or anything. So, but they seem to be pretty good. And, you can risk some. Again, I don't make any promises or guarantees because I use several different trading accounts. I have one with an account in London. And as a U.S. citizen, it's hard to get because most of the foreign brokers won't let U.S. citizens trade. So to get a good leverage on your account, I recommend the GNT account. If you don't have one, I can throw a link in the our trade Titan Circle. Oh, and by the way, my danhansen.com, I'm building the page for the Titan Circle. All the videos will be posted there. I'm moving them this week. I thought it was going to happen last week, but I ran out of storage space on my account and I had to find another place to store stuff. So I'll be moving my videos this week. And
You moving on where?
it's going to be at danhansen.com. My first and last name.com. And I'm also writing a book.
Oh,
I'm writing a novel. Yes, I am. And
oh.
I'm doing another podcast out of there as well. Of course, the study group is always free to the public, and more than happy to share whatever we have there. And if you have anything you want to ask questions about, put them in our Titan Circle group and say, hey, this is a topic I want to cover this week. Let me know. and I'd be more than happy to cover it. Like I said, today's class was on ETM candlesticks, and I can show you some more on that. Speaking of the ETM candlesticks,
I'm so far behind, Dan.
I hear you. We'll have catch-up
Yeah,
sessions for you there. I'm a little bit behind too. I got
I
videos in 3 different locations, unfortunately, so I'm trying to find them all and put them all in one place.
I'm in the zone. I haven't been able to pay attention to nothing on this trade thing. It's
Right.
been one whip for me.
Gotcha.
Yeah. So
So let's go back to that ETM candlestick indicator. So I showed you how you can turn around and get the different ETM candlesticks. Showed you how you can turn them on. But there's another feature that people have a tendency to forget. And this is one I've been using a lot lately to, I guess you could say, fireproof my trades. One of the gifts that G Money gave us is a thing called the Oracle. And there's 2 of them here. There's one at the 5 minute and there's one at the 15 minute. So I usually go with the 15-minute Oracle. And it's only available on the 5 minute, 15-minute, and the 60-minute. However, I'm going to toss on the 10-minute because I like I'm trading the 10-minute time frame. You can just add another time frame, put a comma in between 60 minutes, 60 minutes. It's all done by minutes. So an hour and 2 hours would be 120 minutes, so forth and so on. So here's an indicator that I have fallen in love with. Now we're on the 10-minute, right? Come on, 10-minute indicator. Work for me. Why won't it show up? Oh, there it is. The reason why I didn't see the Oracle because it's way up here. So the beautiful thing about the Oracle is it'll tell you whether you're in for buys or sells. And it's also based on what they call the Ichimoku cloud. So if I turn on the cloud, you'll see that this lines up to a certain level with the cloud. This is the lagging line of the cloud. So usually when price is above this Oracle line, we're looking for buys. Although in this area, see how it turned black? That's an indication that there may be a change of direction in the market. And it did. It kind of went up. It peaked. It kept going up. Even though the lagging line was below price, it went up. And I believe this is one of the reasons why we're at an all-time high and price is now making a decline, going back and testing lower prices. It's going back to find levels that have what they call gaps in candlesticks or gaps in price. So there's a lot of buyers still below 33.55, which is our low on the 1 hour. We know we got some folks down there waiting, but we got to come back. We're going to come back. We're going to probably test this next level, come back and test our ETM, our supply zone here. So I would leave this trade in because it may come back and retest it. So if I were to do that, I could even drag my price down and see if it goes the other way. And if I'm probably wrong, well, maybe not. So we got to sell. Oh, I was on the last candlestick anyway. So I created a drop basically here, or ETM BEC. Not a very pretty one. It's rather ugly, but it's still indicating that they're still looking for sells. Price is still going to continue to go down. So I'm glad I abandoned this trade going up. But at some point, price is going to come back and test these levels. And but not right away. We're going to probably test this low down here. And based on just using the ETM candlesticks, we're looking for a lot of sells. even though we see some bullish like impulses here, but this decline has been crazy. Everything's still pointing down. So momentum is one of the other. Does the risk management tool come with it? Yes, it does. So let me quickly go over the risk management tool. The risk management tool is at the very top. So say you have a $100 account and you want to risk 1%, and your basic stop pips, say my goal is always 50 pips. So it'll tell me if you get a 0 as your lot size, the smallest you can trade is a 0.01. So if you're at 0, you're definitely talking about a 0.01, a point, anything like a 0.09. 0.10 would be lot size of you'd see a 0.1. So if we change that now to, and you're only risking $1, say we make that $1,000, 50 pips. See, it's got a 0.02. That's why I recommend, we're talking 50 pips. The more pips you risk, the more money you're risking. So 100 pips, you're still risking the 1%, but you're only risking $10, even on 100 pips. So that's the beauty. You're risking only the percentage of your total account, 1%. And like I say, you could change that to 2%, 3%. And if you have $1,000, you might be able to risk up to 2% easy. And you got the 0.02, you're risking $20. 0.03, you're risking $30. So all depends on what your risk appetite is what you're going to want to risk. Does that make any sense, Don? Or do you prefer Donald? I hope that answered your question, Donald.
Yes, it does. Thank you.
All right, cool. Anything else you'd like to know? Speaking
Yeah,
of-
my brain fried.
You got French fries? Pass them
Yeah.
out. You got enough for all of us.
My brains are fried. Okay, so you said with the 100 pips. That's
Right.
you're risking $20
Right.
to gain 20.
Even if you changed it and did 50 pips, say you did 50 pip risk, you're still risking the same $20, and your lot size would change to 0.04. 0.04. See how that changed with the higher risk? The lot size changes.
That means you get money faster.
Right. So for every 50 pips above that, you'll earn 20. So if you have a 2-to-1 trade, you get $40. Is that right? 2-to-1? Yeah, $40. 3-to-1 is 60. So you're risking $20 to make up to $60 or more.
Or you can lose the same amount.
Or
You're
you can
risking
lose the
to
same
lose it faster.
Correct. However, if you look at the 100 pips, notice you're risking a lot. If what did I change it wrong? 100%. I don't want to do that. That's crazy. 1%. 100 pips I meant to put there. 100 pips. So you're only risking that same $10. You're going to still risk that same $20 on 100 pips, and you're still going to risk that $30 on 30 pips. So your stop loss, even if it's 100 pips, you're only going to lose $30 on the $1,000 account. Change that to a $100 account, $500 account might be okay. Yeah, so you're risking 100 pips, you're risking $15 on 1 pip. Isn't that interesting for 3%? So 5%, 1%, you're only risking $5 on 100 pips. So your 0.01 lot size, and then 2% should be a 0.01. So even 10 to, so anywhere between a 10 and you're going to, on a $500 account, you really don't need to risk more than a 0.01 or maximum on a 3. So you want to go 3. You're still gonna, for $15 for 100 pips, you're still gonna risk that same $15, or you're gonna risk $15 compared to 5, 10. So for every additional percentage, you're gonna add $5 to $1,000, $500 account. But not all of us have $500 accounts. Say we got $100 account, 3%. It's going to be a point. You're risking $3 to get three. You're going to be risking up to 3%. So you might want to break it down and make your max. That's why my max is somewhere around 50 pips, or if I can get it down to 35 pips. But you're still risking 0.01. Anything lower than a 500 on a 500, lower than 500, you really don't want to risk more than 1%. That's just my personal opinion. It's not recommended by anybody, but it's what I've learned the hard way. I just want to have people not make the same mistakes I made, but that's how we all learn. We all make mistakes in trading.
So Dan is not alone. I'll share this. I had $100 account since last year from the old company, and I finally blew it and got it all the way down to $1. 1 cent. I'm sorry, I've got 1 cent in there. So I said, okay, then I'll start over. But I mean, I don't feel bad because it lasted. It kept going up. I kept making trades and winning trades, and then it would go down and up and down. But this last few weeks, I tell you, I've just not been going in the right direction. But I'm starting over. I'm going to reload my account and get started again. And the more money you can have in your account, then you can increase your lot size to 0.02 or 0.04 and make money a little bit faster, but you can also lose it faster. But I just have to say this last thing. I did some scalping maybe last year sometimes, and I hit over $1,000 just in doing little small wins. So I'm going to try that again as well and see if I can, once I put money back into my account, that I can bring it back up. So anyway, I just thought I would share that.
Oh, well, thanks for sharing that, because I'm sure there's a lot of people that are experiencing the same challenges. Now, whether,
My,
I'm almost positive we've all experienced something like that.
my challenges is just off the chain. I don't understand it myself.
I hear you. I hear you. Because,
Then, I know my head ain't good, but now I'm trying to calm down.
yeah.
I've been doing some crazy stuff.
Well, that's when I found it's time to take a break. That's
I
why
hate
some
taking-
take a break from not taking a break from trading per se, but taking a break from your live account, trading account. You might want to, as Mark Douglas points out in Trading in the Zone, start with a demo account. We all should be starting with a demo account to practice your entries and exit strategies. Whether it's an ATM candlestick strategy, and keep track of those trades, see which ones are winning and why did they win? How are you feeling? So keeping a journal of what's going on in your head when you're placing a trade. Do you feel confident? And I have some check marks to see when I was looking at this trade, this here particular candlestick pattern going the opposite direction. I was thinking to myself, why will price continue to go the opposite? No, this one or this first one here. I saw this one. I go, why wouldn't I trade the other direction? And what gave it away is I turned on the ETM oracles. And when it was so far below the oracle, and look at where price is, then the beautiful thing is G Money has one more indicator. Now to throw another iron in the fire, as he has his Ichimoku Cloud strategy box, which he only has set for the 5 minute, 10 minute, but we still got our markups, we still got our trades, but I'm going to change it to the 5 minute and show the momentum box. So if we go back to this trade back here, backwards in time, and look at it from right about there, everything is looking like it's bullish, like the market's going to continue going up. There's only one indicator that says it's not, and that's a 17-minute box on a 5-minute. It's showing, and not only that, if you go to the 2-minute time frame, if you see below in his box indicator, the 2 minutes showing bearish. So once the 2 minute shows bearish, I know the 5 minutes surely going to follow. And it does. It just keeps going. It goes and going to test the midpoint of the 204 box. Going to give it a test. It's looking at it. It says, "Oh, okay, we didn't quite make it. What kept price down was this BEC right here. There's a little candlestick in there. You can see it right in here. That kept price at bay. And this is what kept price down. That little candlestick. And you notice the indicator still shows red. So we're still bullish on the 5-minute. Look at the 2-minute, or bearish on the 5-minute. Now you can see why on 17. The 17 box is represented by this 2-minute. And it's all bearish. So we know that prices are going to continue going down. What's that, Ms. Cyrus?
I'm trying to follow the box of my red box.
Right. So on the 2-minute, you'll see that. So if you see the on the bottom, you have, and if you don't know how to find that,
Bearish, yeah.
you got bullish, bullish, and bearish.
Yeah.
So I'm still looking for the 5-minute to follow the 2-minute. Because the 2-minute is going to let us know what's going to happen to the 5-minute. Believe it or not, it does, especially when the 17, which is represented by the 2-minute 204 box. So this little square was represented by that 2-minute. So we know it's going to continue going down. And we're going to start seeing that continue. We're going to let it play out for a bit. Now we're starting to see a drop even more so. We're still in profit, and we got an incision. Going to try to test that midpoint again, and we're still showing bearish on that 17. And if you just keep watching, now we got a drop-based drop, which is going to give us the momentum to keep going down. So it negates this big, long white candlestick inside here. We've already broken the opening and close of these two candlesticks at this level. So we broke this basic level. We closed below it. And this was my note to self that I'm looking for at least 33.55 as my take profit. And without using a Fibonacci tool. I just knew to set up my settings as that's where I was going to head. And God loved the box system. And see how now everything's turned red. Now we got a 5-minute bearish. And we've also got a drop-based drop. The last 3 candlesticks are a drop-based drop. Not a pretty one, not picked up by the indicator, but that's where knowing the patterns, knowing the meat of the patterns, the thickness of the candlesticks will give you a better indication of what we're looking at. So, even if you place a trade at this level here, at this indicator, at this low, we've made a low, we've got to come back. So now I can set one more trade, sell at this level. And I'll take my take profit right about that low entry, and I'll go for a 2-to-1 again. This is a 2-to-1. The same level, basically the same level as this one. I picked this level, and I'll just leave that. So it's a little over 2%. So I know the next candlestick will, at least one will go back and test it. There we go, took profit on that trade. Came back, got in the entry. Although the challenge is, I don't know if I made my stop loss deep enough. But so far, still good. I haven't stopped out yet. That's where I stopped out. So I didn't set my stop loss high enough. This is where most traders get frustrated because I set my stop loss at this low, or actually this high. I didn't even set it at a low. I should have set my stop loss at this candlestick low, which is right at the base of that, just to make sure. So that's part of your risk management too. And I had set it too tight of a stop loss, as they call it. So if I followed this drop-based drop here and used this level or this level, it wasn't high enough because we have some liquidity, or as they call it, liquidity, or there's some sellers down at this level. And if I draw a line here, see how it tipped in? It just wicked in, found some more sellers waiting in this zone, and this drove price down. And all of a sudden, both trades won had I used the proper stop loss setting. And that's what's key, is finding that right fix. So if I had set, in this case, it was 41.5. So let's see how many pips. Well, let's see how many pips is that. Well, that's basically 1.16 pips, 16.2 pips, something like that. So is it under my 50 pips? Yep. Even with proper risk management, making it, I still would only, in my stop loss, no matter what, is based on your percentage of risk. So I'm risking on $100 account 1%, which is $10, in hopes of making $20. And that's why risk management is so key. And kind of knowing these different levels of what I call support and resistance or equilibrium zones. And I don't depend on the indicator to tell me where they are. That's the other thing I learned. I learned to recognize, I memorize these patterns. I can do them in my sleep almost. You know, I could even set this one as my entry zone. You know, set my entry zone down here, stop loss here, made my entry at this level. Come on, buddy. Made my entry right at that level. Got in there. Bada bing, bada boom. We're in. We made our trade. We're in, we're out. That's a beautiful trade. That's just using the ETM candlesticks. There's a drop base drop. I took it at the front wall, which is I usually use the wick, the top or the bottom wick, depending on which way the market's going, and the full body of the candle. So in this case, I did my entry based on this body structure right here. That would have been a 5-minute drop base drop. And that would have been my trade. And again, you take it at a low. Boom. There would have been fine. So that could change how much I win as well, you know. So $3.86 would have been my take profit on a 0.01 lot size using $100. So not bad. You know, if it was higher, if it was 2%, it'd be double that, and 3% would be triple that. All right. Any other questions? Well, I appreciate everybody for coming and joining me this afternoon. I will send a link to the video as soon as I get it downloaded to my computer. Yes, Ms. Cyrus, quick question.
No, I just want to tell you, I'm gonna go to bed and then wake up again, look at this.
Okay, sounds good. All right, in the meantime, I'm going to stop recording. And if anybody wants to ask any more questions, I'd be more than happy to entertain a few. Otherwise, everybody have a blessed Sunday. Happy trading, and we'll see you again next week.
Okay.